If you pause and see, what you notice, to come to here, market doesn't need to move to really in our big green slope. Even a little bit of movement can give us a lot of comfort. This is only happening because of our adjustment and the strike selection which we are doing when we create the strategy. Hi everybody, welcome to a very powerful concept which I'm going to share with you. If you trade into the markets and if you trade with a view, trend sniper, master momentum before it takes off. Before I start, I have to give you standard disclaimer that any strategy which you learn contains some amount of risk. Risk cannot be zero. What retail rarely discovers, number one point and the burning issue is trend sniper in a nutshell. Just like the name is telling you, trend sniper. Basically, when you trade into a spread, you have some kind of a view. This kind of strategy, which you're going to learn very fast in next few minutes, I'm going to tell you everything. Really capitalize on your view. I'm going to tell you strategy creation, adjustment, and everything else. So let's start all the fun now. First, we're going to make this trend sniper, and after that, I'm going to tell you all the positives and negatives of it. And most importantly, when you should not do this, when you should cut your risk, when the risk is more. I'm going to tell you every single thing which you need to know. So here we are on an option simulator, your friendly Opstra. We open option chain, and obviously we are picking the monthly series, which happens to be September now, obviously because August is over. Now what do? We go where at the money is. Now note this point very carefully. We're gonna pick the strikes now. So first things first, we will sell the put which is trading around at the money, and we got to sell 2 lots of it, right? So we select 2 lots and we sell it. We are selling it at the money put. I hope it's clear. After that, what do? We jump to the next strike, which happens to be 24,700 in this situation. And in this simulation, what we can do is we can buy 2 calls, right? So we shorted 2 puts and then we are buying 2 calls. We are buying 2 calls, which is 1 strike up. After this, what do? We go maybe 300, 350 points more out of the money, and then we buy again. And this time we are buying not the call, but we are buying the put. So we go come here this side, and then we are buying puts. Okay. And after that, only 1 leg remains now. That is, we go 1 strike up again, 100 points up, and then we sell this call, but we are selling it 1. Let me again tell you. First, we sold the put. Why don't I show you here? And obviously you will have a look at the payoff as well. This is how things look at the moment. We are just starting things out. You're learning something brand new, so pay attention. I'm going to explain you in 30 seconds. Now, what do you see? Number 1, we sell the put at the money. Easy, very easy. After that, we buy 2 calls, which is 1 strike above 50 points or 100 points. That's absolutely fine, right? Then after that, what do? We go more out of the money and we are buying 2 puts. This put is obviously in the money. This is a put, not the call. So pay attention here, right? Done. After that, the last strike is this. We go 1 more strike up and then we are selling the call. But this call which we are selling 1 quantity. I hope this point is absolutely crystal clear to you. You can take a screenshot as well if you like to. You can save it in your phone so you know exactly the strike picking method. Even if you pick 1 strike above or below of what I'm showing you, that will also be fine. So don't need to worry about this, right? Now we are clear. Now let's have a look at the payoff because I have to explain you some things. Now here, have a look at the margins because you keep telling me in comment section that you don't want to pay a lot of margin, etc., etc. You're busy, you're working professional. I heard you. So that's the reason why you see the margin here. You could see it is quite less, obviously, because we are buying and selling in such a combination where we do not sell naked call and naked put as you know it, right? Now here, couple of things really stand out from the payoff. So if markets start to go this horizontal, this vertical line which you see is the futures. So if futures starts to go bullish now, what you see is that there is a really steep up graph which you see here, because the reason is that we bought the put at the money and then we sold 1 call. So this 2:2:2:1, this is helping. But at the same time, if things start to go completely against us, then what you see is that we are not taking a lot of risk. Risk will always be there. It will not be zero, but at least comparable to what if things go up and things go down. You see a big and drastic difference so far. Now I know what you're thinking. You want me to test this in a bullish month when things go in the favor, and when things go completely against us, how we are going to maneuver it. So I'm going to cover this. So let's start with the month when things start to go in our favor. What do? We are checking the bullish month now so that you have some amount of idea on the ROI, right? So first things first, what we're gonna do is that we're gonna see it in a bullish month, right? So naturally this month is bullish, and this is an option chain. So first thing first is what we will look to sell at the money puts, and we sell at the money puts too. Easy. This is step number one. Step number two is that we jump one strike up, which happens to be 24,800. You can pick 24,750 as well. That is also absolutely fine. And now we long it, and we long 2. This ratio is not to be changed, please, right? 2:2:2:1. After this, what do is that we go more above and we find a strike, maybe 25,000, maybe 25,100, and now we long 2 puts again. Simple. We do this. After this, we go more strike above, and now this time, this is the final and the last leg. We sell 1. Very easy, and the payoff will look very familiar. As you can see here, this is how it looks. And do not worry about this red zone which you see here, right? Don't worry about this red zone, because this is only there if you stay in the trade till the last minute when the series is getting expired. But are we here for the last minute? No, we are not. So let's see now. Now this is really a trending strategy, and let's see how things work out when things start to go in our favor. In terms of margins, you already know approximately this much is a margin, around 110. So let's see if things start to go in our favor. How do we do? And now you see Tuesday have come, etc. In one day itself, what you see is that we are doing pretty good with this. Then there is not much of an issue. And now what you see is that the market stayed where market is. Market haven't moved much, but when we look at the total PNL, it looks to be fine because we are still in the trade, okay? And if we stay in the trade for some more time, and let's see what happens now. All we need is a little bullish month, and as soon as that happens, what do we see is that we start to do really, really good. But as you know it, we cannot cut the risk completely. Risk is always going to be there. So in the next example, I'm going to show you if things start to go completely against us, then how do we really tackle it? Now, working people like strategies like this, and if you also like strategies like this and would like to go deeper through our structured educational course, check the pinned comment. This is purely for education, not a financial advice. Now we're gonna check the month in which things go completely against us. So we are at the option chain now, and this month is going to go bearish. So step one is what we're gonna do is we will come at the money and we will short 2 puts. The formula will remain same. We are shorting it, easy, very easy to do. And then we go one strike above, and then we buy this, and we are buying the call, which is 2. And the next step is that we go again little more out, little more further, and we are not buying the call. Don't do this mistake. We are buying the put now. Put is going to be in the money, and when you buy in the money put option, it's always advised, do not enter your trade blindly via market order, because there's gonna be a difference between bid and ask. So always have a look at the bid and ask spread, and it's always better to enter via limit order. That is something which you must know, and we look to buy this again, right? And now what do? The last step and the final step is we go more further out, and now this time we are shorting. We are shorting the call, but we're not shorting 2, we are shorting 1. This is the ratio which we've been able to do it if we want to capture the trend. But now, as you know, things gonna go completely against us. So how do we maneuver it? We're gonna manage it as professionally as we possibly can. And by the way, if we just have a look at the strategy, you know it, if it go up, then obviously the expected things will happen. But if it go down to whatever extent, I don't see there is much of an issue here, but there's gonna be some risks. So how do we tackle it? That's gonna be very interesting. Let's go ahead by one day, and what do we see? Market starts to go down, and we start to see some amount of loss, which will ask for some kind of an adjustment. And now what we see is that market has gone even more further out now, right? Market has really turned bearish on us completely, and market has really gone far from the green zone which you see. So how to adjust it? Now, whenever you adjust any strategy, couple of things must really you got to keep in mind. Number one, that we do not want to, for adjustment, give a lot of margin. Right, that is something. Number one. Number two, the adjustment should be safer. Now, I can adjust it by many different ways. There are a lot of ways by which I can do it. But the number one thing is the call which I sold, which is really far out of the money. We sold it for 110. Let's see how much it's trading for. So we come here, and what do we see is the call which we sold for 110. Now it's trading around 41.5. It is trading less than 50%. So a majority of the premium is gone completely in just a matter of couple of days. So what do? As soon as we remove this call, we're gonna free our margin. Some margin gonna get free. So as soon as we do it, as per the rule, this is done and this is sorted, and this is how it looks now. We have captured the profit, we capped it, our margin is free. Now what do is that we open option chain now, because obviously it's in the complete red zone and we like to cover it. So open this, and we don't want to do a lot of adjustments. We want to use the margin very smartly, the margin which got free. So now we come here at the option chain and we see where at the money is. So now with that free margin, we can sell a put. Okay, it may take slightly higher margin, which you can check it, and we can sell one extra put. Go slightly out of the money. Whatever we are doing it in the same series. I do not want to make it complicated for you. And as soon as you do this, something like this really comes up on the screen for you, right? Now, obviously, you can sell a much lower strike as well. We sold 21,800. You can sell 21,600 as well. You can go really low if you like to. And let's see how much effect this is going to have on the payoff. And this is how it is looking right now. So you can even go further. You can go 21,300 as well, 21,000 as well, 21,400 as well. This is your try. Now, obviously, if market has fallen so much and so swiftly, what do we expect? We expect market to take some kind of a breather. Now market can go even more further down. Obviously, market can reverse back up again. Let's see what happens with this trade. Market currently is around 22, and what do we see is that now 5th of March have come, and we are still in the negative territory here, and market has gone just a little up. And what you see is that the entire minus ROI which we had when we do adjustment like this. And also, by the way, this green zone is still very much further out. Even then, a little snapback, and by the way, even if market stay where market is, the theta decay is always going to be in its effect for you, right? If market continue to go down, market go down, and then if market go down more, and if market go down really far fetch out, then these two puts which you sold, this can be managed as a normal naked put. We can obviously manage it, but all we need is a little bit of breather for a couple of days to recover whatever ROI which we lost. It's happening not because of magic, it's happening because of the theta decay which we have. I want to remind you one thing. When we started the strategy, how we started the strategy like this, right? If things go in our favor, we are taking a view. If the view go correct, then you know what's going to happen here. Like I showed you in the bullish example, this is the bullish example, right? You could see it. After this, what if things don't go in our way? If things do not go on our way, then we square off the call very smartly. We take out the margin is free, and then we go down and we sell the put. And if 21,600, which is actually very far, if you don't find it comfortable, you can sell 21,200 put as well. So you can go really deep down. Like I say, in options, you can do so many things, different combinations of it. Which combination will sit when exactly, that is the name of the game. Option trading is really a craft, and craft can be learned. Things can be improved once you learn the better techniques and the better way to do things. Now I have to tell you VIP points. I'm not gonna leave any stone unturned for you. I'll give you everything, whatever the strength of the strategy, the weakness of the strategy. If things don't work out, then how do we do it? Do we have a hard exit in this? Let me talk about that. VIP point number one, when things go in our favor, we don't need to get greedy to book really high, like double digit of an ROI. Point number two, remember not to do early adjustment. Now, this is the mistake which a lot of people can do, is when we trade strategy like this and things go little against you, then immediately jump into the adjustment. we don't have to do it, the early adjustments. We have to give market some time, some breathing space, okay, to swing in our favor. When market go really far further out from our green zone, then we can look to have some kind of an adjustments, okay, by freeing the margin and keep a hard exit stop loss at all times. Stop loss is definitely an integral part of the trading. If things go against us, or if you are late in our adjustment, or some things are not looking nice, and if you're not comfortable, it's always better to completely exit. That always remain in our final plan. So the thing is that we enter the strategy, things work well and good. If not work, then we adjust it. If that doesn't work as well, then we try to sell the put really far further out. If that also doesn't work, then we have a hard exit. And if you've been trading iron fly, I've made a video in the past, really good ideas you can get from that. Or suppose if you trade Batman, if you trade ratio spreads, or if you trade calendar, the calendar video is really nice. You can take advantage of it. If you keep doing the same thing from a long time and expect different results, then it's not really good. It's always better to upgrade your game, and just like you learned now, you can learn better stuff. Thanks for watching the video, and I wish you all the very best with your trades. Take care. Bye-bye.